Welcome, friends. Welcome to the NCBA studio. In 1897, a group of bankers met in Morehead City to form the North Carolina Bankers Association to have a single, strong voice for the banking industry in North Carolina in the General Assembly, the halls of Congress, and in the regulatory agencies that existed at that time. Advocacy remains job one at the NCBA today, and that's the topic of our conversation in the studio today. And I'm very pleased to have joining me in the studio today Nathan Batts, NCBA Counsel and Director of Government Relations. Nathan, welcome to the studio.
Thank you.
Glad to have you here. Before we get started, I'd like to talk a little bit about who you are, what you do, and how long you've been with the NCBA. Just share with our viewers, our bankers, a little bit about yourself.
Sure. So I started back in 2005 for the Bankers Association. And I can remember because my first event was our Economic Forecast Forum. So it's now been 21 years or so, actually 21 years, 6 months, 13 days. It's easy to kind of remember that because
But
of
who's
the event.
counting?
Yeah, exactly. So my role here at the association, I am in-house counsel and I'm Director of Government Relations. And so what that typically involves is a pretty interesting mix. I mean, there are days when I'm doing pretty intensive lobbying with regard to our General Assembly, days when I'm interacting with bankers, trying to understand compliance issues and things that they're navigating. I may be dealing with regulators or other elected officials. So my days stay very full, but it's a very enjoyable task. And the nice thing about that is you just kind of know going into a particular day, hey, I think I'm going to accomplish this, but then something else comes up and it's kind of exciting and interesting. Certain days is stressful, but it's a very interesting ride.
You know, one of the things I tell bankers about all the time is you played a significant role in the modernization of our banking code. What year was that?
Well, there was a long run up to it. In 2012 was the time frame that we actually worked with the General Assembly and getting passage of a modernization effort. So you look at North Carolina as a great center for banking. Much of our laws actually dated back to the 1930s. And it's amazing how successful that was when you just look at how North Carolina banks have expanded across the country. But we did realize, certainly over time, and certainly when I joined the association, was working with some of the other attorneys and individuals and bankers, that there were opportunities to enhance our laws. So much had happened in the intervening decades. So that was a real time frame when we looked at what was happening nationally. We identified where the points of friction were, where we could have some opportunities there. And I really credit our commissioner of banks. They were very forward thinking. They put together a working group to kind of navigate this issue, brought in industry partners. And then I, as a young attorney, kind of out of the gate, was brought in to try to synthesize some of what the attorneys and others had come up with. And so I was kind of a scrivener in certain ways, but then I had to figure out ways to organize and enhance and come up with new statutes. So it was a very interesting exercise for somebody who's a young attorney and relatively new to banking at the time. So again, there were a lot of people who were involved in that project, so I want to give them the credit they certainly deserve.
Certainly. Great experience. And we enjoy that same productive relationship with our banking commissioner's office today. So, one more thing before we get into specific legislative issues that we've been dealing with in the General Assembly, let's talk about our process, specifically how the NCBA comes about to sponsor a bill, or how do we make a decision on what bills to oppose?
A lot of our ideas bubble up from our bankers. Somebody can approach us with an idea and say, there is something that I would like to see changed. And that kind of starts the conversation. And if I'm the one that's kind of having that conversation with them, what I try to get from them is give me a little bit more of the anecdote. If I'm thinking ahead to having a conversation with a legislator and making a pitch on a particular issue, I want to be able to understand that. And as an attorney, I tend to make things very technical. But I know when you're trying to explain it to somebody, they want to know the practical implications.
Right.
And so if the banker can tell me that and they're available to have that conversation, it's great because you can kind of tag team, having the conversation with the legislator, having the banker provide some input and perspective. And once you start with that initial conversation, Then we kind of move to a process, assuming that things are kind of moving along. We have a legislative and regulatory committee. It's just under 20 or so bankers. It fluctuates across time. These are bank executives, they're government relations directors. We try to strike that balance. We have nationally chartered banks, we have state chartered banks. Um, Combining those perspectives, we take an idea. Maybe, as I said, we've had that initial conversation with the legislator. Maybe it's before that stage. We decide if this is something that the committee finds interesting,
Mhm.
because there's always an opportunity cost, as we know, working on something, developing it. But what we tend to try to do is identify the stakeholders, work on developing a draft, and then when we have a more polished product, then we have those additional follow-up conversations. So it's a continuum that starts with a lot of conversations with the bankers and others, then goes to the legislative stage. And of course, no legislation is going to move forward here in North Carolina without the legislators understanding the moving parts and
Mhm.
engaging and saying, that really makes sense. Let's move forward.
Yeah. So it's definitely a banker-driven
It
process.
absolutely is.
So then, in any given session, let's just say on average, each session, how many bills are filed?
So over a 2-year cycle, we typically see anywhere between 2,000 and 2,500 bills filed. And you look at how that's framed, like last year was what we call a long session. You see that in odd numbered years. We saw, I want to say, about 1,800 bills filed over that time. And then this year, which is deemed to be a short session, which I can come back to, about 550 or so bills filed. About 10% of those typically affect banks.
Hmm.
When you think about all the things that we're involved in, it's more than just how you secure a loan or your interest rates and fees. It could be real estate related. It could be employment law matters. All of those are part of the mix. That's why I say out of, say, 2,300 bills, 10% or so affect us.
Hmm.
And so those are the things that we're trying to navigate. And then, of course, we know, just as we see with Congress, it's kind of a funnel. You have so many bills filed, and then some of them get combined, and there's a mishmash. I think last year we had around 100 that became session laws. And this year, with the session that started toward the end of April, April the 21st, we've seen just over 50 or so that have
Hmm.
moved to the finish line.
So that narrowed down this session to about 80 bills that we had to actively lobby or
Yes.
monitor through the session you brought to the Legislative and Regulatory
Mhm.
Committee for conversations about what should we support, oppose, or just give a pass on. And that was a fascinating discussion to watch how that all worked out.
Mhm.
So we're going to talk about some of these here today. Let's start with the credit union bill. For the past 3 years, we have opposed a bill filed by the credit union industry that would have effectively given them the ability to become tax exempt banks. So we've had to oppose that. Let's talk about where that bill landed and how we got there.
Starting with where we landed, ultimately, there's legislation that has now been signed into law, and it effectively is a compromise. It was wrapped into some other legislation, and it's changed over time, as many of our bankers know. When we go back 3 years, when it was the start of another 2-year cycle, a bill was filed that, in many ways, was plain vanilla. But I want to talk about the key elements as well that were not plain vanilla. So when you look at, just like with our modernization effort for our banking laws, the credit union industry had last modernized their laws around 2013. Some of their provisions were much older than that. And items that were uncontroversial. Maybe you have a bad actor who's employed by a credit union. What are the ways in which that can be escalated? Does the administrator of credit unions, who's the regulator at the state level, have the authority to do X, Y, or Z? Those types of things, you need to make certain that there's robust policing. There are provisions related to directors and officers and their bond. All that, again, is pretty standard. Where we had significant concerns, and we voiced these, and I credit our bankers and the great grassroots efforts and the legislators for really digging into it, was in a few key areas. One of which deals with the issue of field of membership.
Mhm.
So when you look at how credit unions were created historically, supposed to serve people of modest means who share a common bond. In North Carolina, that means historically there have been a few avenues when you're setting up your membership for a credit union. It serves people of the same occupation, or alternatively, individuals who are in the same community, Or the third option would be they all have the same employer. Now, there's other pieces that mix into it. So, for example, your family members can be part of that field of membership.
Hmm.
And so, what we saw with the credit union legislation was an attempt to take those different pathways which exist and collapse them together. And we saw at the same time initiatives as it related to businesses. And if an individual had some financial stake in a business, let's say they had a partial ownership interest, was that enough for them to potentially be part of that field of membership and by extension, all their employees? Once you start muddying all those things, it becomes very problematic because I think there's a lane for each type of financial institution that's out there.
Hmm.
And I believe this very passionately. And in the context of credit unions, they're not subject to federal corporate income taxes. So you're looking at what, an effective rate, but even 21% is the starting point. Then you have the layering in of the state income taxes.
Hmm.
You have franchise taxes, which they're also exempt from at the state level, which in essence is tied to the assets. So banks are paying these things, but if you basically have open fields of membership, you collapse all these things together, so effectively anybody in the world and any business can be a member, that's a major issue.
It becomes a tax-exempt bank.
It becomes a tax-exempt bank. And there were other elements in there that we wanted to better understand. And again, it's part of a conversation. So when we read something, we want to understand the moving parts of it, just like the legislators do. Other elements we saw initially, open lending to states, local governments, tribal governments, across the board. Now, some of that got refined over time, of course.
Hmm.
And then there are other elements as it relates to, I mentioned business lending activities, but think too about smaller communities across North Carolina and the delivery of financial services in those communities. At what point is an area essentially in need of additional financial services? And so we had part of that question was, what does the delivery of financial services look like? You know, banking by cell phone versus having that bricks and mortar branch.
Hmm.
And so these were things that were part of the conversation and negotiation. And I'm pleased that ultimately the legislation that was wrapped into recognized that there were distinct roles for banks, distinct roles for credit unions. And so the field of membership issues that I talked about was removed from the legislation. Same type of thing with the refining with regard to the lending activities and lending powers.
Hmm.
Again, that was narrowed. And then we had a good collaborative discussion as it related to rural North Carolina and the delivery of services there.
Yeah, and serving people who are underserved in banking deserts. And so I think that was all very productive. And in the General Assembly's wisdom, they accepted this negotiation and passed it as part of a larger bill, which we can talk about in just a moment. We sponsored another bill that modernized the banking code for savings banks, something that hadn't been touched in quite a while, and that came at the recommendation of one of our bankers, Earl Worley at KS Bank. And he was very passionate about this. So let's talk just a little bit about what that bill did and what the law does.
Sure. So the legislation that you're mentioning there deals with savings banks. And just for everybody's benefit, when you think about banks and the evolution across time, you have your commercial banks, you have savings banks, you have savings and loan associations. And there's a lot of really old history on this, and I won't be too much going back to that. But historically, certain types of institutions were more focused on lending for those mortgages to get houses, or it was a certain type of really stable sorts of investments. And the commercial banks historically were more focused on kind of the business side of things. Of course, over the decades, there's been a lot of convergence with the business models.
Mm-hmm.
And what that has meant, though, is in North Carolina, we actually have three main sources of law as it relates to banks. And when I say banks, I'm talking generally about banks, and I kind of lump them together, and I'm bad about doing that myself, but we had a commercial bank chapter, a savings bank chapter, and a savings and loan association chapter. And so what happens is if you modernize one, you need to make sure that the others are also modified and improved.
Mm-hmm.
And what we identified was within the savings bank chapter, there were some pieces that really needed some enhancement. So a practical example for you would be you've got a board of directors, you've got local individuals, you've got people who are involved in business, but then we also talk about other types of individuals when you're talking about having a diverse board, variety of backgrounds.
Mm-hmm.
One of the provisions that we still saw in North Carolina law required a significant ownership interest. And it makes sense on some level when you look at it historically that you want to make certain that your financial institutions are safe, secure, people have some skin in the game, they're running that business, helping run it, the oversight function of a board of directors. But if you're also trying to strike that balance, as we see nationally as it relates to diverse boards, that became more of an impediment. I mean, not everybody's going to have, say, $5,000 that they can deposit in a mutual bank or that they could buy in the form of stock. And so that impediment, when we looked at what was happening nationally, needed to have better alignment.
Hmm.
But then there's some other practical aspects of legislation which say that within the next year, the Commissioner of Banks Office, as a state regulator for a variety of institutions, including savings banks, will form a drafting group to work through and identify where we really need to have better alignment. Maybe we just need to converge some of these statutes together. Our banking statutes, Chapter 53C, maybe combine them together. So that's kind of an open question, but this goes back to the issue of banker involvement. Having an idea, saying, can we do this particular change? Here's the rationale and the reason. And then that leads to productive conversations with legislators and ultimately to legislation.
Yeah. Well done. Thank you. We also sponsored a bill that enabled banks to prevent fraud for elderly and disabled customers. Let's talk about that bill a little bit. It was signed into law as part of a larger package. So, what does the bill do?
The bill is incredibly important. I'm very proud of all the individuals who were involved in this and the legislators who brought it forward. One of the things that we've, as an industry, struggle with nationally is just the prevalence of fraud, particularly as it focuses upon older adults and disabled adults. And one of our dilemmas as an industry is when we identify that somebody may be being victimized, maybe being scammed, how do we address that as an industry? And so if you go back about 13 years or so, North Carolina, and we were involved in this conversation with the legislature, and we're part of a group that was working on it, created a process where financial institutions, if they suspected financial exploitation of an older disabled adult, in North Carolina, older adult is defined as 65 or older.
Mhm.
It required reporting to local law enforcement or to adult protective services. What it didn't do at the time, though, was address the issue of, can we pause a transaction? Can we do some sort of temporary you know, initiative just to slow things down? And you think about individual who's an older adult, they may have caregivers, they may have family members and others, they may have really substantial savings. And if we can have a pause that allows us to have a conversation with a trusted contact,
Mhm.
get that as part of the account agreement on the front end, then we can curb a lot of frauds that are happening because we know a lot that's going on and certain things that don't seem right. An individual who, you know, that they're supposedly having their house re-roofed and they live in your neighborhood and you don't see any activity on the roof and they're suddenly drawing down large amounts of money. Again, we don't want to be policing things, but at the same time, we want to try to do everything we can as an industry to protect our customers. And so the legislation, and this aligns with, I'd say about half the states across the country now have something along these lines. And we took the best of what we saw. It allows a pause potentially of up to 30 business days
Mhm.
with the ability to extend. And remember when I talked about reporting to local law enforcement, adult protective services, again, we're not going into all the particulars of what's happening with somebody's account. It's very narrowly targeted.
Mhm.
What is the suspected fraud? Allows them time to investigate, allows us to have time potentially to have a conversation with that trusted contact that somebody has affirmatively said, yes, I trust my son, I trust my daughter to have this conversation if something doesn't seem quite right. So those are key aspects of legislation. It has some other parts, but just that one piece alone would be huge. And I think it's really impactful. And I'm very pleased with the bipartisan work that went into it.
Mhm.
It ultimately was wrapped in other legislation, but it started in the North Carolina House. We had four legislators on a bipartisan basis who filed the legislation: Representative Stephen Ross, Representative Julia Howard, Representative Neil Jackson, and then Representative Sarah Crawford. They all came together on this legislation. They explained it to the legislators. They pushed for it. North Carolina Senate got on board, and now we have this law.
And wrapping all of this into Senate Bill
Yes,
595
sir.
with the the help and the heavy lifting of Senator Dave Craven, our good friend,
Absolutely.
none of this would have happened. And so we owe a debt of gratitude to him as well as these that you've mentioned. The every session, well, just back to the elderly abuse bill, when it comes to fraud or suspected fraud, time is not your friend. And so, if we can pause these things, and this law allows that, that's where the bank can slow things down a little bit, do a little investigation, and hopefully save that customer a great deal of money. And so, we're very proud of that work, and thank you for everything that you did. So every session, there's some problematic bills
Mhm.
that are filed, and we have to go to our friends in the General Assembly and say this is a bad idea and we have to oppose it. Let's talk about, and sometimes it's just not oppose it, it's just to fix it, make it better. So let's talk about an example or two of how we ran into that in this current session.
Sure. So it's a process. I mean, we talk about, and I would say almost it's a refinement process. One thing that I've tried to learn, and I've learned this sometimes the hard way over time, you go into things with a certain impression of what somebody's trying to accomplish. Almost invariably, what I find is somebody appreciates having another perspective if it's tactfully delivered so they can see potential unintended consequences. So they
Hmm.
know all the various moving parts. And that's what we tried to do. A couple of things do come to mind. One of them is a bill that's made its way forward from the House, deals with digital assets and stablecoins. Big issue nationally. And I really commend the work that's gone into the legislation. And what we're talking about here, and we could talk for hours just about stable coins or digital assets, but it's just in a simplified way. We've seen a trend across time where, just like when you have money on deposit at a bank, we've seen the development of payment stable coins, where there is this digital asset created. You take a dollar of U.S. currency, you get a digital dollar in its place, and there's questions about how you reserve that. How do you make certain if somebody gets that digital dollar, it's 1,000 digital dollars, stable coins, h- they put their cash into it. How is it being protected? Where is it being held? So the legislation is important because it talks about the role of North Carolina banks, for example. Could that be reserved and held at a North Carolina bank? So it's a different type of issuer, not necessarily a bank that's the issuer. But then there are other custodial aspects. Maybe you have Bitcoin or some fractional interest in that, or you're a high net worth individual and you want to invest in some digital assets. Banks have trust departments. We have trust companies in North Carolina. Those are all important. And so I say all that because as we started to analyze the legislation, we agreed with it philosophically. We got some changes that we saw that needed to occur while the bill was still moving through the House. And we come back with some other modifications that we think are important. And without getting too granular, I mentioned deposits earlier. And there's a concept called tokenized deposits, which a lot of our bankers are familiar with. But you look at a bank's balance sheet and you see how it has deposits, and it says Nathan has $1,000 in the bank. Well, you're getting kind of old school in a way, but think about a ledger, almost like you were dealing with Excel or a blockchain would be the most recent iteration of it. How do we deal with that so that we have a payment mechanism where your deposits also serve as a way that you can do quick transfers?
Hmm.
Or you take out a loan and you want to have tokens that are there at the bank. Those are things that we felt needed to be addressed in a little bit more granular way by the legislation so we didn't have unintended consequences.
Hmm. And this is on the heels of the Genius Act that
Yes.
authorizes the issuance of payment stablecoins. And we're seeing a wave across the country. All
We
50
are.
states will see state legislation like this. It's not our bill, but we saw it coming. And so we've been engaged in this and trying to improve it over time. It hasn't passed, hasn't been signed into law yet, but we're still at the table, correct?
We are, and we're pleased by the level of engagement the legislators have had, the
Yeah.
conversations. As again, I think we're all kind of rowing in the same direction.
Yeah.
We just want to make certain that the unintended aspects are dealt with appropriately. And as you said, this is a national sort of thing that we're navigating. This actually goes the interplay between state and federal legislation.
Yeah.
This is where some of our laws in banking are state specific, some of them are national. In this case, we just want to make certain that the laws in North Carolina are arguably the best in class across the country.
Yeah. So as we end our time, let's talk about what bankers need to know about the role that they play in NCBA advocacy. What the credit union bill is a great example of this, but also the stablecoin bill. This is very nuanced and technical, and but we have smart people who know how to advise us on these things. So, talk a little bit about the role that bankers play in all of this.
I think that's a great observation. I appreciate it, especially. I mentioned that legislative and regulatory committee, and they are kind of a first line of defense in many times, and also they help us navigate things. And so, by virtue of having CEOs, market presidents, government relations directors, they bring a variety of lenses to it. And many of them may have attorneys that they work with, so they can be a sounding board and help identify where there are challenges. But our success as an industry across time, and I passionately believe this, really starts at the individual level. When you're dealing with legislators or members of Congress, and you see this, I'm sure,
Hmm.
or staffers, one thing I like to know is who is their local banker? Who would they go to if they had a question about something? Because they could call you, they could call me, they may get a policy level sort of argument or thought process. But imagine if they have that individual locally who's invited them and said, we're doing a branch opening, or love to have you come by and see our team if you have a few minutes. Just those small conversations are incredibly impactful. That sets the groundwork for the relationships. And so when there is a snag, some sort of issue that pops later, pick your advocacy issue. You're not starting from square one as far as a relationship.
Hmm.
That's the trusted local contact. It's all about the constituency, it's being active in the community. And so, if there's any message I really have for bankers, it is try to be engaged. You have so many things that you're juggling. I know that. But if you are known to your local legislator, maybe even consider running for office, or you're a member of Congress, or you go to a town hall, it's amazingly important for our industry and our long-term success when you can find that time to do it, because it means when you're responding, you're calling a legislator or their staffer, or you're sending an email, they have a face and a name that they can connect with.
Hmm. It is definitely a team sport,
It
and
absolutely is.
and as staffers, we are better when we have the team with us in the fight every day.
Absolutely.
So, well, Nathan, we're out of time, and so thank you for joining me in the studio today, and for all
Pleasure.
that you do and that you have done for 21 years. We value your experience and your leadership, so thank you very
Thank
much.
you.
And friends, thank you for joining us in the studio today. This is one of many conversations, and I hope that you'll stay tuned and join us for the next one. Thank you.